Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-macd.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. Very, very important. And this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. The title of this video is how to trade the pound-dollar currency pair. All right, what do we pay attention to? What do we need to do? All right, for this tutorial, I would like to highlight to traders that as long as the pound dollar is above the high of 2013, okay, we must give priority to bullish signal. It does not mean that we just buy anyhow. We'll follow the market patterns. There are three market patterns: the rising channel, the declining channel, and the horizontal channel. This is the key for successful trading. All right, so the high of 2013 is at is somewhere below the turquoise horizontal line. It's at 16579. That's the exact number. So if you look where I'm moving my cursor now, on the top left hand corner, keep your eyes there, and you will see there it's a high 16579. Here, did you see it? Okay, let me do it again. High 16579. That's the high of 2013. The price now above that high. So according to the definition of the uptrend, okay, this is what we are doing all the time. The market pattern: rising channel, that's the uptrend, okay, declining channel, downtrend, okay, horizontal channel, okay, balanced market. If you fight these three market patterns, you are fighting the market, and it's not something that you want to do. All right, do not fight the market. We want an orderly market. So right now, what's happening? The price was before, okay, you see here, it's below, you see, it's just going ups and down between these two levels here, the horizontal line and this red one here, okay? All right, but now it's out of the consolidation zone. But the key point I'm making here, that if the price is going to be bullish, all right, if you understand what I've said today, you can improve your trading. If the price is going to be bullish, it must display higher lows and higher high. In the uptrend, it's very important that we have a new higher high. In the downtrend, it's very important for us that we have a new lower low. Now, very important. So if the price fails to display a new lower low in a downtrend, we put a question mark on that bearish momentum. We will say that it's diminishing. Doesn't mean that it's finished, but we say it's diminishing, okay? Same thing in the uptrend. If the price fails to display a new higher high, we put a question mark on that uptrend, all right? So we will say that the bullish momentum is weakening, all right? But it doesn't mean it's finished completely, all right, until it's come out of the channel and retest the channel and start going into a declining channel again. Are you with me? So this is what I care about. This is what I'm putting into the mind of TST traders so they can use their tool like professional traders, okay? This is what we want to do. Patience, okay, and step by step, all right? So the high of last year, which is 2013, is at 16579 now. Now the price is above it. So we have a new high. Yes or no? We have a new high. All right, we have a new high. So as the price going up now, there are other resistance here. You see here, the high of 2009 is right here. Okay, that's 17044. So as it's going up, we must watch that high. It's a very important level, 17044. That's the high of 2009. Okay, because we took out all the resistance now on our left-hand side, and there's only one left. That's the high of 2009, which is 17044. Professionals know these key levels. The next resistance after the 17044 is the median line of 2008. So you see this candle here, the red one, the big one here. The median line, which is the psychological price level, the 50% retracement level, is a psychological price level. There are three key psychological price levels: the low before the last low, the high before the last high, and the 50% Fibonacci retracement level. So apart from the high of 2009, okay, the year 2009, okay, to the year 2009, okay, 2009, you know what I meant, okay, to 2009, okay, which is at 17044. I want trader to remember this level also. The median line of the year 2008, right? That's 1723H. So because it's like we are driving, okay, we are moving forward, we want to know what we have ahead of us. So these are the things we need to pay attention to so we don't hit them, or so we want to know. So if it's going to be bullish, first, if it comes to the high of 2009, okay, 2009, all right, if we may take profit or secure again, and wait for it to break above it, retest it, and then continue the move to the upside. Break above, retest, turn around. Same thing if it comes to the 50% level, okay, we will wait again. We will wait for it to break above it, retest it, and then continue the move to the upside. All right? One step ahead. The price always moving from one key level to the next key level. So from the high of 2013, we are heading to the high of 2009. If that also is converted into support level, we will head into the 50% Fibonacci retracement level. It's a psychological price level. So it's a thin dividing line between the bulls and the bear. And when the price approaches the psychological price level, market participants, okay, become very cautious. All right. So if they are selling before, or if they are buying before, right, if the price approaching psychological price level, they are very, very cautious because they know that anything can happen. So far, the high of 2013, we are above it, priority to bullish signal. So it doesn't mean that Monday, Tuesday, you just keep buying anyhow. You want to buy like professional traders, okay, break it down. The trading drill, the setup, the signal, and the low risk entry point. Pay attention to the clock, the time of the day, when you're about to enter the trade, and then go steadily, all right? Okay? All right? Priority to bullish signal. As the price going up, we must watch the high of 2009 and also the median line of 2008 until we break above it, retest it, and turn around. Apart from these key levels, I will share with you again my own proprietary trading tool, which has nothing to do with the TSTW trading system. It's my own stuff that I use. The long-term equilibrium price level for the pound dollar is at 159.07. 159.07. This is the long-term equilibrium price level. Right now, the price is bullish, and we have seen that the short-term equilibrium price level keep changing to the upside, which means that this long-term equilibrium price level, the price running away from it so far. Okay, so it's looking bullish for the pound right now. So be careful. I'm not saying that you cannot sell it, but if you receive a sell signal and you are selling the pound dollar, be very careful. All right, doesn't mean that you can't sell, that the price cannot go down. Yes, the price is going up, but we have the second wave and the fourth wave. The price will pull back. There are mini cycles. All right, go to www.stochasticmarket.com, click on finance, and select the sub-menu of a market cycle. I talk about mini cycles. So though the price is going up, there are mini cycles. All right. So when we are selling during those mini cycles, we need to be very, very careful. All right. But when we see a bullish signal, a valid bullish signal on the edge, we will be happy to take it. One more thing I need to mention to traders, talking about the correlation between currency pair that usually mess up a lot of new traders. All right. The Euro USD is the leading currency pair. Now, as we are trading a pound, we want to align the signal that we receive with the pound dollar with the euro USD. So if the euro USD give us a valid bullish signal, and also the pound dollar also give us a valid bullish signal, we'll be happy to take it. The next thing that one must understand, when you are trading the Forex, you are also paying attention to the economy news. You cannot get away with it. Go to www.forexfactory.com, click on calendar, know the high impact news, all right? And this will help you to navigate through the Forex market or the FX market, all right? So you cannot trade Forex without paying attention to the economy news, all right? Don't want the video to be too long, so I'm not going to go today to Forex Factory, but if you watch many of our videos, every video that I'm recording is a Forex video. I'm always talking about, Forex Factory, okay? Very, very important. It's my favorite website, and I recommend to Forex traders to Monday. Check it. Check the news for Monday, Tuesday, Wednesday. On Wednesday, we know that crude oil inventory very often is released on Wednesday. This will change the fundamentals, all right? We change the fundamentals. On Thursday, we have the unemployment claim, U.S. job data. You need to know, all right? You know when the news are due. You are not trading the news. You are trading the price, all right? But you want to know when the news are due and what is going through the mind of other traders. It's about the mind game of trading or trading psychology, all right? All right? So I'm putting this into you so you are aware of it. So it's not all a blank check, all right? When we use technical alone, do our own thing, and disregard other market participants, no, that's not the right way forward, okay? We want to pay attention to what's going on in this messy market so we can make the right decision. If it's not working, we pull out, okay? Pull out. It's your money. Don't give away. Don't give away. Keep it for yourself. Go back to the blackboard, okay? Step by step. Work on your ability to trade, okay? Just trying to encourage you, okay? Okay? So don't take it that, George, you are patronizing people here. All right, don't take it that way, okay? All right. So the long-term equilibrium price level is a 15907, okay? Now, for day traders and swing traders, the short-term equilibrium price level is 16691. The price is now above that level, 16691. If we go, for instance, so these two levels, do not forget, 15907, 16691, okay? The long term is 15907. Don't forget it. Don't forget it, okay? Have a notebook, pound, dollar, long-term equilibrium price level, okay? Short-term equilibrium price level, 16691. The short-term equilibrium price level will remain in place for the next 2 weeks, okay? I don't talk about long-term equilibrium price level because I don't want to. But the short-term equilibrium price level, very often after 2 weeks, will change. If you remain in place, the same for longer than 2 weeks, we know that there's a high chance the price will come back to it. So the short-term, the equilibrium price level is about the fair value, the short-term fair value, that's the short-term equilibrium price level. The long-term equilibrium price level is the long-term fair value. As I've started posting video about this, traders now start paying attention to it because they know that they can mess around with these key levels, this equilibrium price level. That's the price. You see last time? You want me to show you? Okay. I'll show you one example. As we posted a video about how to trade the Australian dollar, US dollar currency pair last week. Okay. All right. So we draw a channel on the 4-hour chart. You remember? Well, I lose what's happened. This channel, you remember? I didn't change it. Okay. Watch the video. You see that I did not change it. And I was telling you priority to sell signal on the edge. Yes or no? As the news was about to release, the price went up a bit to retest the edge and boom, down. Where it went? It went to the short-term equilibrium price level. But in this scenario, what I said to you that for the Australian dollar, US dollar currency pair, right now, the short-term equilibrium price level is equal to what? The long-term equilibrium price level. That's why I have it in pink here. So we don't have the turquoise line, which usually represent the short-term equilibrium price level. It's in pink because the short-term equilibrium price level is equal to the long-term equilibrium price level. As always, the price wants to go back to its fair value. If it's going too far away from it and the fundamental has not changed, the price will correct itself and go back to the fair value. So when the price comes back to daddy, we want to see what it's going to do next. Yes or no? The market pattern, we don't want to fight it. So this is what has happened here. Okay? So going back again to my lovely pound dollar, because I live in London, and I would prefer the pound to keep going up, so we can buy, go on holidays in other country at a low price, all right? So you can understand why I want, but we don't want it to be too expensive, okay? But to be bullish at least for us, okay? All right? So what I would prefer, now I'm going for the pound dollar, I want to go to the daily chart instead, okay? All right, so the pound dollar, we are on the daily chart, as you can see here. And as always, we want to follow the price. So there was a low here where my cursor is, followed by a higher low, yes or no? With 2 points, we draw this gray trend line, okay? So you see the price was riding above it nicely, this is gray trend line on a daily chart, and suddenly it pulled back below it, telling us that the bullish momentum is weakening. But you can see that I've drawn another bigger channel. You see, pay attention to the blue channel. Are you? The gray line is the median line of my blue channel. How do I draw my channel? So with this point and this point, I have 2 points here which allow me to draw my gray trend line. I just need 1 point on the top because the price is rising. I need 1 point on the top. If the price was declining, I would choose a high and a lower high, and I would draw a bearish trend line, and then I will choose 1 point below to draw another line parallel to the first one. So here, this point and this point allow me to draw my gray trend line, and then I just choose 1 point on the top and make it parallel to the first one. So I have my first blue line. Then I will project the equal size because the price now come back below my first channel, the gray line and the blue line. That's a smaller channel on top here. The price was if I extend this one, no, I don't want to mess it up now, okay? If I extend this one like this, okay, the price was in that smaller channel, but suddenly it come back below. So if the price breaks below a channel, what do? We project that channel to the direction of the price. So that's why I have this line here, my measuring stick of the width of the channel. That's not the right way to do it, but it allows me to go fast. So I just project it like this and just draw a line from this point parallel to the blue line. So I have a beautiful blue channel. All right, okay. So now because the price is out of the channel, we must project it. So the base of the new channel, smaller channel, you see the gray line on top and the blue line here, that's our second smaller channel, okay? But the bigger channel is the blue channel, okay? So looking at the lower channel here, okay? What we will prefer, because the short-term equilibrium price level is at 16691, the price, if you zoom into it on a daily chart, the price is a little bit away from it, okay? We will prefer, doesn't mean that the price has to do it, we will prefer the pound dollar to come back and retest the edge of this channel. That will be beautiful for us, but it does not have to do it, and before heading back up. Now, as I explained to you, one must watch the Euro USD and align the signal with the Euro USD. Another thing I need to mention to you, which I said 100 times, is that crude oil, okay, though we are not trading crude oil, will influence the Euro USD, okay? So if you have access to crude oil data, pay attention to it because it will influence the Euro USD, and the Euro USD will influence currency pairs that are positively correlated to it, all right? Okay, so that's my own expectation. I would prefer it to come and retest the short-term equilibrium price level on the edge. You see the intersection point here, and then before going out to come nicely a little bit near, and then from there we look for a clear-cut bullish signal, and we take it up from there. All right. So on this daily chart, we have a rising channel, but the price is not rising on the upper side of the channel, which is alerting us that the bullish momentum is weakening a little bit, but it's still in the channel so far, so it's not completely kaput. So to speak a bit of German to you, it's not completely kaput. So we can't just, it will be kaput if it come out of the channel, okay. And then if the lower part of the channel is now suppressing the price, so which we break below, retest, turn around. It doesn't happen yet. So though the bullish momentum is weakening on this daily chart, it's still bullish because it's in a rising channel. All right? But if, for instance, like I show you, you remember what I said at the beginning for the yearly chart? Next week, all right? If you want to be bullish, what should happen? The price might display a new higher high compared to last week's high. So what do I mean by that? Traders who are TSTW24 traders, notice. Traders who are TSTWSY008 traders, notice. There are videos that are posted on your website, which we talk about the trading idea part 1, part 2, part 3. So highlight the high of last week candle, the low, and the median line. Okay? So if you do that, sometimes you see that the price, beginning of the week, will pull back nicely and retest the median line of the previous week. And if it's going to be bullish, and from that point, it will just run away. But we don't just assume anything. We wait for clear cut signal. So, trading idea part 1, part 2, okay, to draw the high of this candle on the weekly chart, the low, and the median line. And as I said to you, we prefer it to pull back near the short-term equilibrium price level. But if it's strongly bullish, it may not come back and retest it. It will just turn around at the median line of last week. Nothing should stop you also to use the monthly chart. It's about, I even share it on YouTube, the trading idea part 1, part 2, part 3. All right, check it on YouTube. You'll see video about that, okay? Very simple trading method that will keep you out of trouble, okay? So this is what's happening here on the monthly chart. We don't want to ignore. So it's looking very, very bullish for the pound. I'm going to go back now to my daily chart. So when we are trading the pound-dollar currency pair, what are we doing? We are trying to compare the economy of the United States to the economy of Great Britain, all right? So if the economy of Great Britain is doing better than the economy of US, okay, we will be buying the pound-dollar currency pair because it's a pair, two currency pair, all right? The British pound and the US dollar. So we are comparing these two currency pair. The reality, okay, in Great Britain will influence the pound, and the reality, economic realities in the United States will influence the dollar. So we are comparing two currency pair. The economy news that are coming out relating to the pound will influence this pair, and the economy news that are coming out in the US will also influence this currency pair. On the other hand, because of we are trading Forex, the currency pair are correlated. They are not like stocks. That's why sometimes traders find it very difficult to trade the Forex, because you are trading one thing, but you are not trading one thing. You are trading maybe 4 or 3 things. All right, this is the message about the Forex market. It would be nice to have every currency pair completely independent, but it's not like that. That's why it's not recommendable to trade too many currency pair unless you understand what is a hedging and what is taking place in this messy Forex market. All right? It makes sense. It is also powerful. All right? So do not forget the short-term equilibrium price level 16691, the long-term equilibrium price level 15907. The high of 2013, as long as the price is above it, we give priority to bullish signal. Okay, very important. If the price is going up, we want to know where are the next resistance level, the high of 2009 and the median line of 2008. These are the key resistance level as the price progressing to the upside. Okay. Now, for short-term trading on a daily chart, we will prefer the price to pull back a little bit, okay, to retest the median line. That would be nice for us. But if it's too bullish, we want to pay attention to the trading idea part 1, part 2, okay, using the weekly chart, the high, the low, and the median line. Those are the key levels we want to watch. We don't want to assume anything. Every Monday, traders find it very difficult to trade Monday. By Monday evening, a lot of new Forex traders have lost their money for the whole week. So by Tuesday, they don't have any more money to trade with. Don't get into that game. On Monday, London will open at 8 a.m. All right? This is the mind game of trading, and somebody needs to tell you that. So it's good to trade a London session, which is beautiful. London open 8 a.m. You want to trade Forex? Go for it. First 2 hours, great. Or maximum first 3 hours. And then pull back, pull back. If you have some money on the table, take them out, make some profit, take it, rejoice. Wait until New York is open. In fact, I will recommend to traders, if you find it very difficult to trade on Monday, wait until New York is open. That's where the games began. And New York will readjust the markets. 10 a.m. Eastern Time, that's the time. Okay? You want to watch carefully. 10 a.m. Eastern Time, 3 p.m. London time. After New York is open, look for the best setups. Okay? So Monday, very often, the market can go up and then come back down and then blah, 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 blah. Very often, the market does not trend on Monday. I may be completely home this Monday. So check the economy news and but just be aware of it. It's not always the same, but be aware of it. Tuesday, the market usually adjusts itself because Monday traders come in, they adjust their portfolio, profit taking, blah, 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 preparing themselves for the week. So can be a little bit blah, 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 blah. And that's usually mess up a lot of new traders because they don't know what's happening. And you want to know so you don't, pay the price for it, okay? So we are comparing the pound to the US dollar, all right? So the decisions that are made by the Federal Reserve, in the US will affect this currency pair, and the decisions that are made by the Bank of England right here will also affect this pair. So we know that in the United States, the Federal Reserve was busy printing the dollar. They can't afford to do it anymore, so they just pull it out. They change the Fed itself, the Fed chairman. So we have a chairwoman now. So the policy has changed, all right? So the market is not expecting the Federal Reserve in the United States to continue to print the dollar. So they were thinking that, they will now start putting interest rates up. But this is a difficult decision for them to make because if you start putting interest rates up, you're putting pressure on the families, all right, to pay their mortgage payment goes up, and people struggling again, and then the economy collapse. So though they stop their quantitative easing, they can afford to put the interest rates up. In London, as I explained to you last time, the pound is very resilient. No, it's not because I live in London that I'm saying to you do not sell the pound, but it's just because, this economy is resilient. I said it last time, traders laugh about it, but I proved them wrong, all right? So, what is happening in Great Britain, all right? Recently, I think I said it last time, recently, the economy benefits from some money that the bank was paying to their customers. This is PPI money. So the bank were paying billions in pounds in London to ordinary people on the street because there was some insurance, payment protection insurance that was sold to their clients, their customers. So the court has decided that this PPI, payment protection insurance, were illegal. So were wrongly sold to their customers. So they had to pay all this money back. So ordinary people that were broke, do not have any money to spend to go on buy something for themselves. Suddenly, there was some unexpected money that was coming in. Huge amount were paid to real people on the street. This is a huge boost for the UK economy. That's why, the economy was resilient. So apart from that, the British people like to spend money. So it's something that you cannot remove from this culture because people like to spend money, which is helping the economy. So you see that the economy is going to fall down, and then the next thing you see is turning again because people are just buying, participating in this economy. That's why I say to you, the pound is resilient. So talking about all this, all right, we know that the reality in Great Britain is improving, all right. Decisions were made to reduce the costs, all right, where in the United States there were more spending, but in Great Britain, the current government was busy cutting, benefits for poor people. I don't know what I mean that they were busy reducing costs, because if things become too difficult, you have to reduce your expenses. So a lot of decisions were made, which in long term will benefit the UK economy. Now, there were other issues regarding the policy to encourage people to buy their houses. So I don't want to dwell on this because I just tell you that when we are trading a pound dollar currency pair, we want to know the reality in Great Britain and the reality in United States. So I know more about the reality in the United Kingdom. That's what I'm sharing with you. So I hope you find it also useful. So when we are using Forex, we are talking about real money. So if I want to go to United States, I'm going to convert, okay, my pound, okay, into dollar. Or if I'm using my debit card, okay, I don't use credit card. If I'm using my debit card in United States, anytime I take money or I purchase something in New York, in Los Angeles, whatever, United States, okay, the bank is converting my transaction from the pound into the dollar to pay, okay, the shop. All right. So these are real assets that we use, and the government of each country care about their currency. People were saying at the beginning of last year or year before that the dollar will collapse. I said to them, no, that's completely nonsense. The Federal Reserve will not, or the government, the U.S. government will never allow the dollar to collapse. All right. Same thing in Great Britain. We have the Bank of England that is protecting the pound. So sometime you will see that the government will come out and mess up your trade by making some decision or by saying something. So we want to be aware of the government. These are the Federal Reserve, the central bank. These are also market participants. In fact, the hedge funds are paying attention to the policy that are made by the Bank of England right here, and also the decisions are made in the United States to forecast or to have a bit of idea what is likely to happen to the pound dollar in the long term, in the medium term, and also in the short term. All right, so these are the decisions that are made. But the key point I want you to understand is that when we are trading the price. But we want to be aware of the economy news, the fundamental that can change, okay, the dynamics of the market. So we don't want to be technical traders alone. We want to combine the technical and the fundamentals. To cut long story short, ladies and gentlemen, priority to bullish signal above the high of 2013 as long as the UK economy is delivering. So if, for instance, a few months later, okay, the unemployment is start going up. But in London right now, the unemployment, okay, people that are out of job is going down compared to other parts of the Europe. So a country that is, we may say that these are short-term jobs, these are whatever, but people are not depending on the benefit or on the government. They have something they are doing now. So the unemployment is going down in London, okay? All right. So the manufacturing also is improving. So they start exporting more goods. All right. So these are the things we want to be aware of. So whenever you are trading this pair, do not forget www.forexfactory.com. All right. Check the calendar, check the economy news, and pay attention to the Euro USD, and if you can, to the crude oil. All right. So I think I've said enough about this currency pair. We want to be bullish this year, okay, but we want to watch the high of 2008 and also the high of 2009 and also the media line of 2008. If the price breaks above those key levels and they find support, okay, we will look for opportunity to buy. If the price is going up, so you come in Monday, you say to me, George, I'm a day trader now. Okay, let's go to the 2-hour chart. Okay. And let's see what's happened there and draw some line. Okay. So we are now on the 2-hour. In fact, I'll go to the 4-hour chart. It's more compact. All right. It's because people like the 4-hour chart. So I'm going to start drawing lines here to draw line. So this point and this point allow me to draw. I'm going to color it in orange. That's not what I want to do. I'll color it in orange, okay? So you see here, and here, and here, all right? That's our trend line here, okay? So that's why you see it's also coming near the blue trend line that I draw on the daily chart. So we will prefer it, roll, bring it somewhere here, near the 16691, which is the short-term equilibrium price level, okay? But going into the mind of other traders, something else is popping up here. Some people may say, oh, George, this is the left-hand side shoulder. Oh, this is the head here, George. Are you blind or what? Which country are you from? Okay, so they will say, all right. And they will say, oh, George, they say, are you blind? Okay, we have an inverted head and shoulder here, George. So, now I'm trying to go into the mind of other traders. I'm not talking for myself. They will say to me, George, here it is. We break out here. So this is a convergent point. Ah, beautiful. Convergent point. So they will say, all right, George, I'm trying to go into the mind of other traders. And you say, if we continue, we may go even to this level. 17124. By using this measuring stick, first target hit. If we find a support at where it is now and continue to move to the upside, George, there's a high chance we go to 17104. So this is about the 2-hour chart. So far, on these 2-hour charts, I don't want to draw too many lines on this chart. There's a rising channel here. There's a rising trend line. Here it is. But from this point onwards, the price starts speeding up. Do not ignore it. So what I've done now, this point and this point. First, what have we done? We've done this point and this point. Yes or no? We draw the orange line. Now I draw another bullish trend line because the momentum was increasing this point, okay, and this one, not this one, this point and this one. So if I color it again into orange again, we are the 4-hour chart, and you see we are below the second. So we are now in this triangle here. Do you know how to trade this? All right. So there is something else. So if it's coming near the turquoise line, we can use the median line of this angle. Are you with me? You see this angle here, the 2 orange lines. All right. We're on a 4-hour chart. You can do that yourself. Watch the video and see how I've done it, and you can do this. I don't like that color green there. I don't want to use, I'll use a dark green. Yes, that's not bad. So that's the median of this angle here. You see that's where it's retesting here now. That's the median of this angle. So in my view, I'll prefer them, the stubborn bulls to let it come, okay, and retest at least the orange line here, or completely, okay, the short-term equilibrium price level. And then from there, we take it back up, okay? That will be better for us. But right now, it's just touching the median line of this angle here. Yeah, okay, you see now? All right, so pay attention to the median line of this angle. It may come down, retest it, and then boom, come back here. Or you may find the support and then go back to retest the top here, or go in this, go ups and down and here, in this green and the orange one. So you want to know. So though the second bullish trend line, which is the orange line here, the price was above it, so was supporting the price. Now the price did below it. Is it going to go back and retest it before coming down? Watch out for it, okay? So this is what we can say about the short-term trading day traders that are wondering what George is doing to them. All right, so this is it. So I will wrap it up. So we were talking about the pound-dollar currency pair, okay, how one can trade the British pound and the US dollar currency pair. All right, we must understand that the currency pairs, we are comparing two currencies. In this case, the pound and the dollar. The reality in the United States will affect this currency pair, and also the reality in Great Britain will affect this currency pair. Decisions that are made by the Federal Reserve in the United States and decisions that are made by the Bank of England will affect this currency pair. Traders must always combine the technical and the fundamentals by checking economy news at Forex Factory. Whenever we are day trading or swing trading, we must not fight the market patterns. All right? So That's why we are giving priority to bullish signal above the high of last year. But we do not buy anyhow. We will buy in a rising channel. All right. The short-term equilibrium price level is at 16691, and the long-term equilibrium price level is at 15907. All right, we don't want to forget that key level. The high of 2013 is at 16579. Ordinary traders spend their time paying attention to technical indicators. Professionals spend their time watching key levels where there is a value. I hope you have learned something from this video also, and we put into use, to make excellent trading and investment decisions. This is about how to trade the British pound and the US dollar currency pair. Until the next time, enjoy yourself and be very happy. We are the TSTW, 24 traders. Speak to you soon.